Hi, it's Lee and welcome to the Tesla Economist. So we're hearing some stock analysts that have crystal balls are showing that Tesla may only deliver about 2 million vehicles in 2023. If this is the case, then it means that 4680 sales aren't hitting volume production, and these analysts know more about Tesla than what Elon has told us. This 2 million deliveries for the quarter is somewhat thrown out there on a demand side basis, as in it's not that Tesla will fail to produce that many, but there just won't be as much demand for their cars due to this influx of Chinese EVs and the economy crashing, and how the stock is pricing in this drop in demand due to the fact Tesla won't increase deliveries by 50% year over year if this scenario did occur. Incidentally, if Tesla hit high volume production in Texas early next year, then that factory alone should be close to 500,000 units for 2023. In addition to that, we also have Berlin supposedly hitting volume production at the start of next year, which would likely mean a further additional 400,000 units likely produced in 2023 too. If we produce 1.4 million this year, then those additional units alone takes us to 2.3 million. Then the fact that Q3 ramped up Shanghai another 30 to 40% too would also account for a further 250,000 units. Then we hear Fremont should also ramp up perhaps a further 150,000 units, taking the total deliveries for the year to 2.7 million. Now that is not my prediction, that is more based on the last that we have heard from Tesla and Elon about the progress of the factories. Now that's actually an 100% increase year over year. Nice. But analysts like to try and be clever. No, they like to sound clever and authoritative by making numbers more conservative and almost mocking fanboys who think they get ahead of themselves. Rarely do these analysts throw out big numbers, as they don't want to look ridiculous and be ridiculed. Credit to Cathie Wood back in the day throwing out big numbers for Tesla. Anyway, I have openly talked and explained about the lack of credibility from these fund managers, analysts and institutions compared to retail investors. It's just that the market follows what they say, not what retail analysts say. They are the celebrities in this arena, but are as credible as perhaps Kim Kardashian's view on world peace. Okay, perhaps not that bad, but you get the idea. Just because they are more authoritative doesn't mean they're more credible. Anyway, how bad, for lack of a better word, is 2 million vehicles for 2023? Even with a 600,000 increase in deliveries, a record increase year over year, it feels like this is a negative scenario. How bad could it be? Let's even price in this stronger US dollar, and let's imagine that very little happens with Texas all year too, or as in 4680s don't ramp. In fact, it's even worse than that. Just some more perspective, Q4 production might be close to 470,000 alone. That's the entire quarter. The end of the quarter will be doing more than the start due to more ramping. In other words, the quarterly run rate at the end of this quarter might be more like 550,000, implying that even if Tesla maintained that run rate for the rest of 2023 with no more ramping or expansion in a very fast growing industry, then that would be 2.2 million. So these analysts who are estimating 2 million are saying that production will slow down next year from what Q4 will do in this growing industry with all these new factories. I think they're trying to predict that demand will drop, and they're trying to make a realistic future for next year to compensate, as they want to sound very professional and conservative, as if they take your money seriously and almost like they have a crystal ball. Yet, just a reminder, 85% fail to even beat the S&P. Yeah, Tesla's going to deliver more than 2 million next year, unless we see some sort of black swan events. Anyway, you know who the analysts are saying this. I don't want to try and ridicule people on the channel. I try not to make enemies, but I'm also going to give my honest thoughts on everything, no matter how credible or respected the person in the community is. Oh, except Mary Barra. Now, Tesla also have their energy business expanding. I mean, this is not a secret. We have a 40 gigawatt hour a year facility coming online very soon, considering they broke ground on this new factory in September last year. My theory is that Tesla will actually be producing some decent margins from this facility. If they were on about 0% gross margin previously using 2170 cells, converting to LFP cells in a high output production line, I'm estimating 25 to 30% margin, and this would be 10 gigawatt hours a quarter of energy for megapacks, compared to perhaps around 1 gigawatt hour quarter previously. Also, this frees up a lot of 2170 cells that can go into Powerwalls, thus increasing sales there too. And I would guess that Powerwalls do have a positive margin, even with 2170 sales, given how expensive they are. Okay, it's not going to be noticed too much relative to vehicle profits, but it's still a decent profit. On top of that though, it will start to show investors that Tesla is not a one-trick pony, and they do actually have other sides to the business rather than just autos, that they are capable of expanding. I would hope that we start to see more Megapack factories coming online too. There feels like there's going to be so many more LFP cells coming out to the market soon, exponentially. Or perhaps Tesla will hold off there and they'll just wait till they have their own in-house LFP cell. But we were talking about vehicle deliveries for the year, so let's get the numbers. We know that Shanghai now has a capacity of 14,000 Model Ys and 8,000 Model 3s a week, or an annual run rate of 22,000 a week, or 1.14 million a year. That is capacity now, without any other upgrades, expansions, or new factories. Fremont alone should be 600,000. I expect about 150,000 just for this quarter. In other words, we're already at 1.75 million run rate at the current capacity we have now. That is the annual run rate of these factories. That would mean that we only needed 250,000 from the other two factories combined for the entire 2023. We've already been told to expect Berlin to hit volume production at the start of 2023. That's 5,000 a week, which would total 260,000 vehicles for the year. That would be the total production of Berlin if they didn't ramp at all after hitting volume production at the start of the year. Yes, it would also assume no energy issues. Just a quick side note, I cannot see any solar panels on Giga Berlin. If they were expecting potential energy issues, I might have thought perhaps solar and megapacks there. I guess they can be installed quickly if urgent. Okay, just to acknowledge, basically Tesla are at a run rate of 2 million around the start of the year with these three factories. So if they don't ramp up at all for the entire year and don't have any too much downtime, then they should hit 2 million. However, Tesla's factories continually expand and ramp, especially Berlin, that we have been told to expect to hit one every 45 seconds, which equates to 700,000 a year, probably excluding downtime and upgrades. Either way, I would expect Tesla to reach about 500,000 a year run rate in Berlin by the end of 2023. We've also been told that China alone should eventually hit a run rate of 2 million, including an additional 450,000 unit a year factory to be added, implying 1.55 million run rate from the current facilities. And we were told that there were some improvements in Fremont still to come along, with further Model S and X ramping left too. Anyway, there's also another factory. In fact, not just any factory, the biggest factory on the entire planet, called Giga Texas. We hope that this factory also hits volume production sometime in the first half of the year for the Model Y. And we've also been told that the Cybertruck should hit volume production there too in 2023. Texas by the end of this year should still be on a run rate that would be around 100,000. So the end of this year annual run rate might be more around 2.1 million already. I know we hope for 4680 ramp and it changes everything, and we get told it's coming soon, but it's the most complex mass production cell in the world, and it is taking longer than we thought. But things are happening. Tesla also realize how detrimental it is to the company and the mission. The last thing Elon's saying, they intend on hitting high volume production sometime in Q4 or at the latest Q1, which I inferred to be close to around 100 gigawatt hours a year run rate. If that hits, then it changes everything again. It actually genuinely offers the possibility of Tesla producing as much as twice than 2022. It really is the most important aspect internally with the business. Then we see this enormous CATL factory being built in Shanghai near Tesla's factory that supposedly is partly to supply Tesla. This factory is huge. I believe it might even be the cell factory for the M3P cells, a cell that I think makes a real difference and has a chance of hitting a sweet spot with many new customers. A cell that may mean Tesla can offer a mid-range Model Y, as there is a large difference in price range between the Model Y rear-wheel drive and the long range. That is really a big gap, as in a lot of demand that Tesla can still achieve between those two. Yeah, bear that in mind, we are not even close to what Tesla can do to build demand still, like advertise. We're in echo chambers. You and I talk to the average person about EVs, they don't have a clue compared to us. Advertising is the tool most auto companies build demand with. We aren't even close to that yet. So we're looking at supply still, which comes down to production. which is why I have tried to outline how many vehicles Tesla might be making next year, and I think it will be a higher run rate than they are at this year. Therefore, I would ignore a 2 million a year estimate and would not attribute too much credibility to anyone throwing out such claims, no matter how authoritative they may be. The retail investor geeks in the Tesla communities will run laps around any stock analyst. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.